They're blaming AI for the crash. Here's the real reason markets are falling. The story they want you to believe. Watch until the end. Because the final part of this video reveals where the smart money is moving right now, while the media distracts you with AI fear stories. Right now, financial media is pushing a new narrative. AI fears. Disruption anxiety. Tech replacing humans. Markets sliding because of artificial intelligence. Fox Business is running headlines like, winner and losers. AI fears spread. Stocks slide on disruption anxiety. And on screen, you see wealth manager stocks bleeding. LPL Financial, down Charles Schwab, down Stifel, down. And the message is clear. This is happening because of AI. But I want you to pause for a second, because this story is convenient. This story is emotional. This story is simple. And simple stories are perfect for hiding complex truths. Tonight, I want to expose what's really happening behind this narrative, because this market move has nothing to do with people being scared of AI. This is about liquidity drying up, credit tightening, institutions repositioning, the end of easy money, and the slow collapse of financial middlemen. AI is just the excuse. Part 1. Why they always need a scapegoat. Markets never crash randomly. They always need a headline, a villain, a reason that sounds logical. 2008? It was subprime mortgages. 2020? It was the virus. 2022? It was inflation. Now, it's AI fear. But here's the uncomfortable truth. Markets don't crash because of the story you're told. They crash because the system underneath is breaking. The story is just there to make the collapse feel rational. Right now, AI is the perfect scapegoat because people don't understand it, people fear it, people feel replaceable, people feel powerless. So when financial stocks drop, they say, investors fear AI will replace advisors. No, investors fear the entire financial model is breaking. Part 2. Why wealth managers are really bleeding. Let's talk about these stocks. LPL Financial, Charles Schwab, Stifel. These companies don't just manage money. They are the middle layer between your savings, your investments, and the financial system. And middle layers always get crushed when systems change. But this isn't about AI replacing advisors. This is about fee compression, margin collapse, clients pulling money, younger generations avoiding traditional finance, and institutional clients bypassing intermediaries. Wealth managers thrived in a world of zero interest rates, easy money, constant inflows, passive investing mania. That world is gone. Now we have higher rates, market volatility, liquidity stress, bond losses, nervous depositors, smart money moving off platform. Wealth managers aren't falling because of AI. They're falling because the party is over. Part 3. The real fear is not AI. It's disintermediation. Here's the word nobody on Fox Business wants to say, disintermediation. It means cutting out the middleman. AI is just one piece of a much bigger trend. People no longer trust banks, advisors, institutions, fund managers, financial TV. They trust self-custody, hard assets, direct ownership, Bitcoin, gold, cold wallets, physical assets. This is an existential threat to the financial industry because their business model is based on controlling access, and AI threatens that control. But not because AI gives advice, because AI exposes how expensive, slow, inefficient, and conflicted traditional finance really is. Part 4. What the institutions are quietly doing. While media screams, AI fears are crashing stocks, institutions are doing something very different. They are reducing exposure to financial middlemen, increasing exposure to real assets, accumulating gold, holding more cash equivalents, hedging volatility, positioning for systemic stress. This is not retail panic. This is institutional repositioning. They're not scared of AI. They're scared of a liquidity event, a credit crunch, a banking shock, a derivatives unwind, a sovereign debt problem, a currency confidence crisis. AI just gives them cover to sell without spooking the herd. Part 5. Why AI is being used as a psychological weapon. Let me be blunt. AI fear is being weaponized psychologically. Why? Because fear creates selling, fear creates volatility, fear creates liquidity for insiders. Retail investors sell emotionally. Institutions buy strategically. The more scared you are, the cheaper assets become. The easier it is to reposition, the less resistance there is to structural change. AI fear creates confusion, anxiety, resignation, hopelessness, which makes people accept losing control over their finances. Part 6. What this means for you. Here's what this moment actually means for you. You are watching the slow collapse of financial gatekeepers, the end of blind trust in institutions, the beginning of a new ownership model, the shift from paper promises to hard reality. This is not a crash. This is a rotation. From financial stocks, paper wealth, middlemen, into hard assets, self-custody, sovereign stores of value, control over your own capital. The people who lose are those who believe the headlines. The people who win are those who read between the lines. Part 7. The big reset nobody is talking about. Every major financial transformation starts with a narrative shift, a villain, a technological excuse. The real reset happening right now is who controls access to wealth, who controls information, who controls custody. Who controls liquidity. AI is just the smokescreen. The real transformation is the financial system shedding middlemen. This is painful, this is destabilizing, this is chaotic, but it is inevitable. If you've watched until this point, you're already ahead of most people. Because most people stop at the headline. You stayed for the truth. And the truth is simple. They're not crashing markets because of AI. They're crashing markets because the system itself is changing. And those who understand the change will survive it. Those who don't will become liquidity for those who do. Stay awake, stay curious, and don't let headlines think for you. This is Felix. See you next time.